Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's Wednesday, April 3rd. Let's take off. First up, will SEC's comment period on Fidelity's spot Ethereum ETF applications lead to regulated investment options? The U.S. Securities and Exchange Commission opened a forum for the public to comment on a proposed rule change that could allow asset management firm Fidelity to offer shares of its spot Ethereum ETF exchange-traded fund. Here's my take on this. I think that the SEC will continue to be antagonistic and abuse their authority and continue to delay here. They'll probably need to come up with a different method for delay, as the previous method they used, they lost in court to Grayscale's lawsuit. So they're going to probably have to try to concoct another reason here to deny this, because the logic that they used previously was extremely flawed and biased. I do expect the SEC to continue to drag their feet here and reject all these ETFs initially, and the industry will likely have to go to court to stop this, while the SEC will continue to abuse its authority and waste taxpayer money. It's sad to see for America. As you saw the Bitcoin ETF, you saw tons of new investors, funds, investment managers, pension funds potentially, everyone gain access and exposure to be able to invest in a regulated product, right? Eventually this is going to get approved, and the SEC will lose if they continue to reject this. Let's move on to our next story here. Silk Road Bitcoin worth $2 billion moved by US government on-chain data. The last confirmed government sale was just more than a year ago. A wallet tagged as belonging to the US government moved 30,175 Bitcoins on Tuesday. Some 2,000 of the Bitcoin were moved to a wallet identified as being to Coinbase, with the rest to another government tagged wallet. I think they should hold on to this Bitcoin for game theoretical and strategic purposes, and they should keep it like they hold gold and other assets. They should also hold on to all of the Bitcoin they have. It just doesn't make any sense from a game theoretical perspective, but obviously we don't have strong thinkers making these decisions at the governmental level. Let's move along here. Crypto AI projects would need to buy chips worth their entire market cap to meet ambitions. Supporting the creator economy with AI-generated video will take more GPUs than all major tech companies operate. The possibility of text-to-video generation excites the crypto market, and AI tokens rose with OpenAI first unveiled a demo of Sora. But to make this mainstream, the compute power will be staggering. More server-grade H100 GPUs will be required than NVIDIA produces in a year, or what its largest customers run in their data centers collectively. Here's my take on this. Over the next decade, the demand for GPU-based compute is going to increase exponentially. As new products are rolled out, as more people integrate to using these products on their platforms, companies, etc., the demand for compute is going to go absolutely parabolic. So access to compute, the cost of compute will continue to go up because it's a simple supply and demand equation. And the number of chips that can be produced annually is simply capped. They can only make so many chips, and they can only make them so fast. So chip fabs like TSMC require billions of dollars, tons of research and know-how. The lasers themselves cost billions, tens of billions, even the highest end ones, and multiple clean rooms, the staff training that's required. There's plenty of governments and companies that have been throwing money at this problem, but money alone will not solve the problem, right? It's why TSMC in Taiwan is so strategically important, and they've maintained the lead when it comes to chip fab production. And all of the biggest tech companies in the world buy fab time from them to produce their chips. When you have a physical limitation like that, it's very hard to scale up to meet the exponential demand. So what's going to happen is the cost of compute and the price of compute is just going to essentially increase and continue to increase. Next up, Cathie Wood attributes Bitcoin rise to national currency devaluations. Simply a math problem here, right? When governments continue to print their currency and you have an uncapped, unfettered printing press, and then you have a money like Bitcoin, which is the hardest money in the world, that has a set in stone monetary policy of 21 million Bitcoin, and that can never be debased or abused. It just makes sense that Bitcoin is going to increase exponentially relative to all these other assets. And indeed, when you look at the charts, Bitcoin is the best performing asset in human history and will continue to be so for the foreseeable future, because I don't see governments stopping printing money anytime soon. So Wood called Bitcoin an insurance policy against rogue regimes and horrible fiscal and monetary policies. Cathie Wood said currency devaluations in Nigeria, Egypt, and Argentina are behind Bitcoin's rise this year. Would label Bitcoin as an insurance policy against rogue regimes. Last month, she reiterated her Bitcoin price target of 1.5 million. I do agree with her, although I'm not sure on the timescale to get there, but I do think it is absolutely inevitable if you look at the mathematics underlying the network and the monetary supply fundamental characteristics. Here's an interesting one. Lido stakes Sol, holders fret as 24 million remain stuck on broken contract. What essentially this is a stake Solana, right? People that are running validator nodes are getting this Solana from this Lido platform, and they are the ones who are staking it, and the users are getting these staked Solana derivative. This is an example of what can potentially happen. You're getting a return, you're getting an APY, and you're not doing the work of running your own node. So there are potential complications that can occur, right? So always be aware that when you're messing around with derivatives of things, things and you're deploying capital to gain a yield, there are risks that can occur. So always be wary with your funds. Next up here, BNB Chain Meme Coin Award attracts developers. I think this is kind of silly that these chains are trying to attract developers to build meme coins, right? It's like essentially gambling, which I think should be allowed, right? People can do what they want, right? People gamble on scratch offs and all sorts of things. So I think this is what this is essentially, but the protocol level really shouldn't be optimizing for them for these types of things. Although it's a free market and they can do as they please, I just think it's a waste of funds to incentivize this. Instead, we should be focusing on DeFi and GameFi, Metaverse and NFTs and things that are much more fundamentally interesting and provide fundamental value to society than Ponzi meme coins and straight up clownery. Wyoming crypto bank not backing down in fight to access Federal Reserve Bank. Many of you probably have been following Caitlin Long. She's done so much for the industry and she has her own bank called Custodia, and they've been trying to get a Federal Reserve master account for quite some time now, and she has been posting up the hypocrisy of plenty of other entities gaining the access to that and the sort of arbitrary nature of the denials here by the Fed. Custodia Bank is on the front lines of the war against debanking from Caitlin Long. So this is a great little clip here from Fox Business, and it's well worth watching. I'm not going to play it all here for you guys live because it's about 3 to 4 minutes long, but we'll put this clip in the show notes, and I highly recommend all of you who are interested in this to give it a watch and give it a listen. All right, now let's move on to our X takes for the day. Luke Broyles, America, you're about to make one of the worst single largest monetary mistakes in US history. Don't sell the 30,000 Bitcoin. Don't do it. You'll have to buy back later by printing your own political currency into oblivion, or you will have to 6102 the BTC ETFs in some fashion. Don't do it. For those of you who don't know, when he says 6102, he's referring to Executive Order 6102, where they essentially seized people's gold, made it basically illegal for private citizens to hold gold, which is kind of absurd and crazy. Total abuse of power. But he's making the analogy here that they might have to do that again. And I do agree that it is really a bad play for the US government to be selling this. There's really no need to sell it. And I think it should be just added to strategic reserves for geopolitical and game theoretical purposes. So whoever's making this decision, not a wise one. Let's move along. Here's a take from Mark Andreessen. Prominent academic brings forward A, studies and charts showing one thing is causing a second bad thing, and B, corresponding urgent policy reforms. So I'm going to go over this post a little bit. I have a degree that's statistics based myself, and what he's talking about here is this idea that correlation doesn't always imply causality, right? So what does that necessarily mean? If you can take two things that might be correlated, and what a lot of academics and people will do is they'll say, okay, well, these things are correlated, so one thing causes the other. This concept of correlation does not imply causality is what I think he's getting at here in this post. For example, if you think about the fact that shark attacks go up when ice cream sales go up, right? You could say that are ice cream sales causing shark attacks? No. Although those things might be correlated, one doesn't necessarily cause the other, right? This idea of a confounder that summer is what is actually causing those things, right? Because people during summer will go to the beach more, so shark attacks will occur more often. And also people will buy ice cream more in summer, right? So summer is the causing factor. It's not the shark attacks causing ice cream sales or vice versa. So here he says, the 5 big questions to ask. Your field is crippled by a vicious replication crisis. 50% plus and maybe even 70% of your field studies don't give the same results when run by someone else. Why believe any of your analysis? So this is the whole point of peer review. When you have a study and it gets peer reviewed to see if you can replicate the results of the study. And what we've seen a lot of is one study being run and there's been no peer review to make sure that that was actually accurate. And a lot of times these studies will get published and you'll see mainstream media post tons of articles about these things and lead people astray. Number 2 here he says, why should we believe wet streets cause rain versus rain causes wet streets? A big part of the scientific replication crisis is misrepresentation of cause versus effect. Why should we believe the flow of causation is as you say? And that's exactly what I just pointed out above. Few important things in the world are monocausal. Most outcomes are overdetermined by several or many causes. Why should we believe that this is the single or main cause that is generating the effect, and not one or dozens of other cause or no causes at all? 4. Many prominent scientists just like you have come forward over the last 100 years with similar arguments. We look back on many of those as irrational moral panics. People freaking out over comic books and dime novels and bicycles and jazz music. Is this just another in a long series of academic and activist-driven moral panics? Thomas Sowell says, there are no solutions, only trade-offs. What are the trade-offs of your proposed policy reforms? What are the downsides to be suffered by people you've never met and feel no responsibility to? Are you personally exposed to those downsides, or are you totally off the hook? So some interesting thought there from Mark Andreessen. Next up, let's look at Balaji Srinivasan's take here. Here's a chart here by Balaji. It says, how do you go bankrupt? Gradually and then suddenly. And this shows the U.S. interest payment scenarios, U.S. interest payments and rate projections. It just shows the skyrocketing expense by U.S. taxpayers for the interest of the U.S. government debt. Let's move along. So here's Paul Grewal.eth. There's lots to agree with in Commissioner Hester Pierce's remarks this week at SEC Speaks, but one suggestion struck me as especially creative and unobjectionable to anyone not focused on a political agenda at the SEC, an advisory committee made up of chief compliance officers to understand how rules actually operate. And he also posts a link here to her comments in her speech and her remarks. Paul Grewal has done a great job fighting back and pushing back on a lot of the SEC, and they're actively embroiled in lawsuits with the SEC as they continue to waste taxpayer money and time. Hester Pierce has been fantastic. She's been a fantastic commissioner at the SEC, and hopefully she will be in the majority here soon, and maybe she will be the head of the SEC. That would be great for the industry and for America in general. Let's move to our next take here. Simply Bitcoin, breaking the US government just transferred $2 billion in Bitcoin from seized funds. This is actually fascinating, right? So you can see the output of this transaction, and this is truly unfathomable, right? So they're moving literally 30,000 Bitcoin, which is almost $2 billion. And the fee they paid is $1.47 to the Bitcoin network. So they just moved $2 billion with settlement occurring within minutes, and they paid a fee of $1, essentially $1.47. Imagine trying to do that, move money around the world or move money somewhere with the traditional financial rails, and see how long that final settlement would take to move $2 billion. Let's move along. This is shocking. Facebook gave Netflix all of your private messages on Messenger in exchange for all of your watch history. While Netflix paid them $100 billion plus for ads, Meta will sell your data at a heartbeat for profit. And here's the source from a lawsuit here. He lists the source. And this is deeply disturbing, right? So I'm not surprised, and nobody should be surprised here that this is occurring, but just realize that, your private data, or your data that you think is private, your private messages with people, Mark Zuckerberg and Facebook will stoop to all new lows, according to the source here, showing this, that they will actually sell your private messages to other businesses. I mean, this is just completely unethical, while it may not be illegal because of all of their terms and services and all the stuff that you sign off on, millions of pages that these crafty lawyers draw up. It is deeply unethical, and shame on you, Mark Zuckerberg, and shame on you, Facebook, if this is true. Let's move on. Here's a post from Pomp, and I think this is kind of prescient if you think about it. All of Wall Street is going to get tokenized. Markets will become 24/7, 365. Bitcoin was the first. Tokenized gold. Stablecoins were next. Tokenized fiat. Eventually, every financial asset will get tokenized. Just a matter of time. Recently, we even have BlackRock launching their BUIDL fund on the Ethereum blockchain, right? Which is just tokenized money market funds, essentially, which is short-term cash deposits. So they've tokenized that and put that on chain, and they used a company called Securitize. And I think that this is just the very beginning, preliminary phases of this, as more and more liquid and illiquid things get tokenized and moved on chain. Finally, let's look at this remark from DS Batten. We now have capital backing for our first landfill gas-powered Bitcoin mining project. One small step closer to an emission-negative Bitcoin network and ending Bitcoin energy FUD. Currently looking for venting landfill sites. If you know landfill owners anywhere, DM me. So for many of you who don't know, one of the biggest problems when it comes to climate change and gases that are released into the atmosphere is methane. Methane is particularly insidious, and right now we don't really have a way to capture and burn that cleanly. Instead, it sort of just vents into the atmosphere. So what's happening here is Bitcoin is filling that role. It's one of the few things that can actually tackle those gas emissions when it comes to methane. As Bitcoin miners can locate anywhere in the world, we can essentially bring a shipping container anywhere and post up and essentially capture that methane burn it cleanly, and capture that energy and solve two problems in one. So that's what Daniel Batten is discussing here. It's been real. It's been fun. It's been real fun. Thank you for listening today. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.